And with that, ladies and gentlemen, it's now time we move forward to the next segment of the day. It's indeed a trialogue. Well, as we all know that the loan against securities is an emerging financial product that allows individuals and businesses to unlock liquidity while retaining investment ownership. Well, the next session will explore how technology and innovation are really reshaping the wealth-based lending solutions. I would urge everyone to please stay with us because here it is another important and a very exciting track and a trialogue on loan against securities, transforming wealth into opportunity. Joining us on stage, first up, may I please invite Mr. Aditya Prasad, CEO and co-founder of 50Fin. Let's put our hands together, everyone. May I also please invite Mr. Parth, Bumiya, Business Head, Infina Finance, to join us as well. And to moderate this trialogue, may I please invite on stage Mr. Deepak Sai, Senior Consultant, the Digital Fifth. A warm welcome to all of you. Ladies and gentlemen, I would urge everyone to please stay with us. It's time for yet another very exciting conversation. Over to you, Mr. Deepak, to take this forward.
Hi, everyone. Good afternoon. Thank you all for joining us today. And just before we start the session, just a couple of pointers to check in the crowd. How many of you are investors, retail, or maybe business side? You keep checking for your business or on the retail side. And just another simple question, how many of you have taken a loan, be it a personal loan, a business loan, or any other particular loan? Okay, so this particular topic today, we are trying to find synergies between these two. I mean, the crowd or the audience for us is looking at the retail investor or the business investor who's actually trying to explore for a particular opportunity on the lending side. And we are already observing that the ecosystem on the wealth side is transforming greatly, right? With the digitization coming into the picture. And last 3-4 days, we have a flurry of investors who have joined into this particular community. And there is more and more of, I mean, let's say, investor community joining in with the ease of buying the securities. And from what we could see over the last 1 year, I believe lending on top of these securities or the investments have become much more easier as compared to the investment part of it, right? So exploring this particular opportunity today, so we'll see how the capital markets and the lending segment are working together to transform this particular side. So for this particular topic, we have Aditya Prasad here with us. So where, I mean, from what I understand, they've been doing some great work in terms of the community where lending against these securities have been largely being transformed on the lending side. So before we straight away jump into the topic, I'll ask Aditya to take a couple of minutes and introduce himself. Yeah.
Sounds good. No, it's a privilege to be here. Just to set a little bit of context, we are 50Fin. Today we are the market leader in providing banks, NBFCs, lending institutions, the digital infrastructure to take loans against securities live. So all the way from your loan origination systems, your collateral management systems, risk management systems, we automate everything, whether it may be for your RMs, your clients, on your net banking, phone apps, take care of this, and then automate your entire internal operations as well, whether that may be for pledge, unpledged, liquidations, management of shortfall, collateral margin management as well. So we've taken this over the last 2 years, and today we're proud to say that today we power 1 out of every 3 loans against securities in India is powered by 50Fin.
Thanks. And we also have Parth here. So Parth, I understand Infina Finance is doing a lot in terms of the loan against securities market. So I'll ask you to maybe take another couple of minutes to introduce yourself.
So just to introduce, Infina Finance is a direct lender into the market of loan against shares and securities. So we are a key player who provides loan against the diverse set of investments and helping the investors to unlock their investments in terms of the liquidity part of it. And the whole objective here is to use the technology by leveraging it and ensure that there is a third-party service providers to ensure the seamless digital journey for the retail as well as HNI customers. So that is the whole objective for us to ensure. Till now we were into wholesale, but we are changing the gamut of retail investor, how they can take the loans with the ease of operations and seamless process.
Sure. Thanks, Parth. And quickly discussing onto this particular segment, Aditya, if you can maybe put some light on how the loans against security market is much more, suitable or an attractive proposition as compared to any other lending opportunity that is there for the retail customer out in the market. And maybe also put some light on how, while this is a secured loan, how this is slightly different in terms of any other secured loan which is there in the market, and how is it going to be easy for the customer?
Understood. So I can go ahead and showcase the key benefits not only for the client but for the lenders as well, because it's a super important point. So for the clients today, if you look at the last probably around 5-6 years, the majority of the loans that have been taken in India have been unsecured, and the average interest rate that they've been accessing is roughly about 20 to 25%. The majority of the loans fall into that particular bucket, and of that, again, all of them are structured as term loans as well. With LAS, you're able to go through a completely seamless digital journey, start to finish. That is from your fetching of your securities, onboarding, pledging, agreement and mandate, and then also open up an OD facility on that same secured loan. Right now, the majority of the market hovers between, let's say, 9.75 to 11%, which is a significantly better interest rate than what average retail consumers have been facing so far. But also on the lender side, I think there's been a very clear mandate from the regulator that it's high time that the lenders begin to also explore retailization of secured products, and that's where we're really coming in to make sure that they have a very low OPEX secured product, digital secured product for them to scale. Apart from the infra division that we have, we also have a distribution engine. So once we digitize your loan book, we also go ahead and then scale it. But that's, I think, the key benefits that we have seen with lenders and also with clients so far.
Sure. So moving or taking this discussion forward, Parth, if you can maybe put some light around on how the traditional secured lending market has been evolved, because as a customer, most of the customers only resonate with, the loan being against a property or maybe a vehicle loan or any other physical asset, right? So with that, moving towards the loan against security side, as a traditional lender, how do you see this particular lending journey as product lending as a product changing at a lender's end, and how do you see that this can be a much more risk-averse option to the end customer?
So traditional lending has been a key source of funding for all the lenders traditionally, and they used to do the transaction or funding in a form of a loan against a home loan or a car loan or any other type of a thing. There they have significantly evolved in terms of the digital platform, but still there is an element of a physical involvement. It cannot be fully digitalized. Whereas if you compare the complexity which is there in terms of loan against shares, it is much more simpler. The valuation can be done on the real-time basis. It can be taken at the click of a button. There has been push from the regulators also to make it more digital. I can say that thanks to Mr. R.H. Patil, who was the revolutionized for the DMAT. And now with the change in the market scenario, you can see the focus is much more on the secured lending through a digitalization mode. So therefore, if you compare from the home loan or a car loan or any traditional products which are there, this is becoming more easy, and ease of transformation in terms of the digital support for the customer is becoming more and more important.
Sure. And moving to the next phase of this particular discussion, Aditya, just wanted to check, with the expectations of the lenders coming in that there has to be more real-time underwriting, or, we all understand that the securities market is slightly volatile, right? So in terms of what technological innovations do you envisage to actually start meeting these requirements coming from the lenders? And also, how do you see this collaboration in terms of the fintechs as well as the financial institutions improving the loans against securities market overall?
I think that today we've been able to solve for a lot of the real-time requirements that the lenders have, whether that may be on real-time market data feed coming in, immediately rebalancing all of the portfolios, revaluing all of the portfolios, the active loans, understanding, let's say for example, you're in the middle of the day and then the market is tanking, how are you going to go ahead and start squaring off your positions? as a lender? How do you begin to write algorithms that can start liquidating those same loan account numbers at a particular under a particular set structure, right? So we've built not just scrapers across the web. We also have direct API integrations with NSE and BSE, whether that may be for a closing price, a 15-minute delay ticker, a 5-minute delay ticker, or live. It all depends as per that particular lender's risk tolerance, and we go ahead and configure the same. But I think that the collaboration between traditional financial institutions and fintechs has actually made this, even a reality. At the end of the day, the fintech is primarily looking at the speed of scale, right, and nothing more. With financial institutions coming in, they're actually informing us and educating us on how we can scale while also looking at how to innovate with compliance, how to innovate with risk operations, and really giving us the depth of the product that we independently cannot have.
Sure. And just checking on, we understand this coming from the overall underwriting perspective and the technology side, right? But with the securities available over there for the underwriting, how do we see the customer risk appetite or the risk against this particular loan coming into picture? And how do we integrate the customer borrower or the borrower profiles into this particular journey path? If you can maybe help us understand how the lenders look at this particular transformation, be it the riskiness of the end customer who's investing, or now we also look at the credit risk also, right? So does it have to be balanced across both the ends as a lender?
Yeah, I can say that the funding which is being done by using the digital platform, so there are different models which are available in the today's world, and technology has played a bigger role in terms of evaluating valuation of the securities, making the complex structure much more easy, understanding through the mode of machine learning how the liquidity can be there. So there are various ways and means the creditworthiness of the borrower and a combination of the security, underlying security can be done by using the risk-based pricing. You can do evaluation of the particular security and ensure that the funding which is done on the basis of the creditworthiness by using the AI machine-based tool. And finally, there will be a dynamic nature of the interest pricing. So by providing a support in terms of creditworthiness of the borrower and by ensuring the security which is there, you can give a best of the competitive pricing which is available in the industry, for which the benefit will pass on to the retail borrowers or the HNI customers.
And just to maybe add on to this particular question, we are directly competing with the, unsecured lending, right? Be it the PLs and the BLs of the world, where the market is just exploring and saying we'll lend it to you in less than 5 minutes or so. So that's what we are competing with when we are saying we'll do lending against securities, right? So currently, what is the turnaround time each of these customers are largely envisaging, if at all they are going for these particular loans, and how do you see that evolving?
So I can say that with the partnership which is there with 50fin, like say for example we have partnered with 50fin, and the whole objective is to ensure that we are able to compete, even completing not only the creditworthiness profile of a borrower, but apart from that also evaluating the security and unlocking the investments, which gives an added advantage as compared to the unsecured loan. So the turnaround time which can be given by an unsecured loan in a 5 minutes period, I think so we are also reaching to that particular scale. And I think so that will become a bigger opportunity in order to ensure that the risk pricing available for a secured lending versus the unsecured lending, he will get the benefit of it. So finally, it will be at par with unsecured lending. And I think so we are also planning to come out with the platform, maybe in down the line 2 months, that we will be able to compete on that turnaround time also on the pricing part of it.
Nice. So to just maybe extend in terms of the ecosystem evolution, Aditya, just wanted to check, how do you see these challenges of data security and the new regulations coming into the picture being integrated with this particular, while I wouldn't say complicated chain, but we have a lot of, it is not as streamlined as the regular traditional lending space, right? So how do you see that reflecting on this particular, ecosystem of LAS?
I think the LAS ecosystem by nature, by design, will always have, I believe that will always have some of the best data security possible. primarily because you're a combination of SEBI and RBI at all times.
Yeah.
You are continuously integrated with CAMS, KFIN, MF Central, NSDL and CDSL. After that, you're going ahead and taking these basket of APIs and putting it into a regulated lenders loan management system or loan origination system, which is again therefore regulated by the digital lending guidelines and the RBI, yes. Right? So by nature, we are in a constant state of audit.
Understood.
In any state. So where we really actually focus our time and energy is more about building the right kind of structure behind our technology. How compliant can we be, making sure that our licenses are always up to date, making sure that the VAPT report isn't just a little bit of a picture on the wall, and actually trying to go ahead and test it as much as possible, right? And the really good part about working with lenders today, and especially lenders like Infina, is that their depth of product is so high that when you're, apart from a regular VAPT that you can have done, the testing that is done is so intense that you are really able to see a crack if it is there, right? So that's when, that's how we kind of make sure that foundationally we are very strong with data security. And on top of that, whatever APIs that you're going to consume today, whether it may be from an NSDL, CDSL, CAMS, KFIN, MF Central, the RTAs and depositories have done a fantastic job in making sure that the data security remains top-notch. So by combining those and also while complying to the regulators' requirements, both regulator requirements, I think we'll make sure that LAS as an industry will always have the highest grade security possible.
Great. So with all of these points, what we are seeing here, so it is very clear for the retail investor base that their data is not only safe and secure, but overall, if at all we see this as an opportunity, we get a better pricing in terms of the loan, and they also have a asset which is constantly growing with regards to the market, right? So that's where there is a, double win-win situation coming in, both for the lenders as well as the customers here, where they're trying to take or have advantage of both the situations happening. So I definitely see that it is a growing proposition, and maybe with the new age of digital tools coming in and more of the digital savvy customer, this will maybe become a next revolution in next couple of years, and we see a lot of activity coming in. Before we move to the summarization of this discussion today, maybe let's check if at all any of our audience have any questions today. Anyone? Yeah.
This question is specifically for Parth.
Mm-hmm.
With shift in trend of investment from traditional investments like real estate and gold, slowly India is going towards capital market products. Where do you foresee LAS as a product to grow, and do you think that it will be as large as gold loan today in India?
Yeah, so you can see the evolution which has happened in the Indian market in terms of account opening, number of the retail account opening which is happening through the push of the government. There is a push on the retail demat account which has grown from say 4 crore to a 15 crore of an account in last 10 years. You can see the SIP levels which has grown from say 10,000, 15,000 crore per month to a 26,000 crore of an SIP. The equity market in terms of the mutual funds and the industry has grown from 10.5 trillion or in the last 10 years to a 67 trillion economy. So with that particular focus, there is a huge focus which is going to come, and LAS today is a very small market. If you compare, today the size of the market is only 80,000 crore. If we compare the same thing before 10 years for the gold market, which was almost some 1.5, 2 lakh crore, today it is standing at around 7 lakh crore. So there is a huge opportunity, and it can become a larger market as compared to many other secured products. So the idea is that from 80,000, whether it has the capability and a reach to grow to 8 lakh crore, yeah, its next 5 years can be a game changer for LAS as a product.
Thanks. Great. Any other question? Yeah. So I'll take this opportunity to thank you both for being a part of this fantastic discussion today and sharing these fantastic insights with all our audience today. And we definitely see that this market is growing, and with all the digital propositions coming in and more investor base rising in India, we definitely see that lending against securities will be one of the topmost propositions that we'll have further discussions about in maybe coming years. So yeah, looking forward to the growth in the ecosystem, and all the best to you.
Thank you. Thank you very much.
Thank you. Thank you so very much, Mr. Deepak, for leading that conversation, and of course to both our speakers for sharing and giving us so much food for thought when it comes to how technology and innovation are really reshaping the wealth-based lending solutions. Can we have a round of applause for all our speakers one more time? And with that, may I please urge Mr. Deepak to felicitate both our speakers with a memento, a token of appreciation. Can we please get the mementos on stage? Let's put our hands together one more time. Both our speakers right there, Mr. Aditya Prasad, CEO and co-founder of 50 Fin, and Mr. Parth Bumiya, business head, Infina Finance. Thank you so very much.